Welcome. This session is powered by Global Talent Solution, supported by leaders of all nations. Global Society for Female Entrepreneurs, Helping Hand Foundation, Explore London, Global International Alliance, Ladies of All Nation, Global Foundation, RM Infinite and Dream Bigger. Today's host is Dr. Jaya Sajnani, and the speakers are Julie Wilkinson, Sujatha Renganathan, and Tina Burke. Enjoy the session.
Hello, everyone. Thank you so much for joining today with us on our first very much episode of Business Success Strategies program. So today's session is about financial foundations. In this session, you're going to learn today is learn how to master business finances for the growth. It's myself. I am Dr. Jaya Sajnani. I'm a mom, entrepreneur, author, founder of YG Travel, and co-founder of Global Talent Solution Hub. Global Talent Solution Hub is a non-profit organization and with a vision of paving the path to future where talent knows no boundaries. Yes, you heard the right. We are dedicated to the creating an environment where talent has no boundaries, regardless you belong to which race, gender, ethnicity, or country. We are here to support you in any of your education needs. So I would like to express my huge gratitude to our supporters. And today's supporters are Loani, Leaders of All Nation International, Dr. Caroline Makaka, GSFE, Global Society Female Entrepreneurs, Dr. Robbie Motor, GIA, Global International Alliances USA, Dream Bigger Institute, Dr. Randy Ward. And before we start this session, which is a financial foundation, learn how to master business finances for growth. Thank you so much. And I can see so many people are joining on our online. This session is getting live on the Facebook, Insta, and of course, LinkedIn as well. So why don't you join us? Drop a line saying hello, which country you are signing in. And please do let us know if you have any question. We have today experts in the house. Yes. So I would like to request everyone to be muted, and we're going to, if you have any questions, then put it in the comment line so that we can come back to you if and with the speakers. So now we have 3 speakers today, not 2 speakers, amazing experts. Without ado, let's start with today's session by welcoming Sujatha Renganathan. Thank you so much, Sujatha. Let me introduce you, Sujatha. Sujatha is a professionally qualified accountant with MBA, Master in Business Administration, specialized in finance, principal at AIMS Accountant for businesses, offering cost-effective accountancy services for small, medium, and independent businesses. I have a first-hand experience with Sujatha, so take my word. She is known for the unwavering integrity, timeless, and commitment in client relationships. I can bow down to that, definitely. She's a chairman of Sevalaya UK and a charity providing educational support to the less fortunate children across the world. Thank you so much. Most welcome, Sujatha.
Thank you, Jaya. That was quite a sweet introduction. Thank you so much. And it's my privilege to join you guys. Thank you.
Yes, Sujatha. Now, if we can start with your journey, if you can just introduce yourself, and then we can start with your presentation about the financial foundation. So over to you.
Sure. So as you know, I'm a qualified accountant in practice, and I have worked in industry as well for about 15 years, after which I started this practice. It's been over 11 years now, and the quality of life has certainly improved. And yeah, I enjoy, helping SMEs on a daily basis, not just SMEs. I also have, individuals who are self-employed. So it's been a portfolio of, various industries and self-employed people. Now, I don't want to talk much about myself. Let's just get into the matter first. Yeah. So financial planning. So why do you think it's important? Can we have the slides, please? Let's have a quick look at the agenda so that people can know what exactly I'm going to, talk today. So we will have a small introduction about the subject matter and then the basics for financial foundation. And I'm going to explain from the perspective of an individual as well as an organization. And yeah, any questions you can ask me at the end. Okay, so financial planning, as we all know, money matters, right? So finance is the lifeblood for any individual or an organization. Imagine a young graduate who has just come out of uni, got his first job. So maybe his initial pay is about, £30,000. Now, how does he progress in his career as well as in his life? Everyone needs money, okay? But if he wants to achieve financial freedom, he needs to think about it right from the beginning, because he is going to take up even more challenging roles in life, like a partner or, a father and so on. So this is exactly where financial planning comes to your rescue. It automatically leads to, a goal. So as long as you have a preset goal, you're able to work towards it. And you just need to be determined and focused as to what exactly you want to achieve in life in terms of money. And when you have some sort of buffer cash, with you, then that relieves you from any pressure, and you will be able to face any sort of struggle what life throws at you at ease, I would say. So that's what I had mentioned here, as it helps for a smoother transition into different life stages. It demonstrates positivity with good money management skill. If you're good with money, then half the stress is gone. As you have a buffer cash, you're able to face any sort of challenge with ease. Next slide, please. Okay, so I have given a kind of flowchart here. These 5 are supposed to be the 5 pillars of a strong financial foundation. Now, this is applicable both for individuals and organizations, and this is, adopted at every level. And I would say it's common for both individuals and organization. It's just that the terms might differ a bit. So why do we need these 5 pillars? If someone has achieved at least half of, these 5 pillars, at least they would be able to proudly say that they are financially independent. Okay, so the first one is investment. I mean, we don't have to explain it. So the very name is, easily understandable. Are you spending within the limits of your earning potential? Because you want to invest for the future. Everyone wants to save for the rainy day, right? So you want to invest for the future and get a return on it. Now, this investment can be in the form of savings, like, deposits with high interest rate, stocks, mutual funds, or probably you can even invest in pension contribution, for retirement. And then the next one is emergency funds. See, no one wants to be surprised. I mean, I don't want to be surprised unless it is my birthday. But unfortunately, life is, full of uncertainties. And every day it's a challenge for some people. There might be some health scare, probably your car getting repaired, or your loss of job, whatever it is. When you have some sort of buffer cash, you're able to face it. And earmarking even, let's say, £50 or £100. Since we live in the UK, since we host from the UK, I'm using, sterling and UK as example here. Earmarking £50 even, a month would make a huge difference. Now, the third one is debt management. So debt is basically your credit card, your loan, your overdraft, and so on. So I wouldn't really recommend having too much of debt, because, yes, of course, there are lots of schemes where you have interest-free credit, but if you don't, pay off your debt within those 6 months, then obviously your credit rating is going to have a hit. So overspending results in excess debt. And like I said, please do not have too much of loans and overdrafts. This would restrict your income, and paying off your debts is essential for building a good credit score. And the fourth one is protection. So how are you going to protect yourself and your loved ones? First of all, prioritize yourself, prioritize to protect yourself. And this is like risk is mitigated in the form of insurance. Insurance can be health, life, property, and so on. And the final one is healthcare. The recent study says from NHS that the life expectancy for a male is 78.6 years in the UK, and a female is 82.6 years. obviously we are talking about at least 20 to 25 years after attaining the age of retirement. So how are we going to cope with the remainder of our life? So you need to save something for your health concerns. So these 5 are really important for any individual and organization. Like I said, these would be the basis for a strong financial foundation. Now let's talk about individuals. Next slide, please. Okay, so I haven't given the title as individual because you can see many people here. So that's the symbolic representation of individuals. Okay, so the first one is, what's your start point? You will know your income. So from there, you can at least have a goal as to what is that you're going to achieve in life. So do you want to buy a house? Or do you want to, go on a world tour or whatever? So it makes one to be really focused and organized when you have a reset goal. And on the first point, I just want to add one more thing. As an accountant, especially in the UK, there are lots of websites which would give you like salary calculator. So if you know what your annual income is, like when you're a salaried employee, this is more applicable. So when you have an annual income, just put that on any of those websites which would calculate salary, and that is going to give you the tax and national insurance, and you will know what your annual take-home salary is. But to your great surprise, your pay slip given by the employer might be different. So if it is different, this is mainly because of the mess up by the HMRC in the form of tax code. So HMRC loves to take most of your money. So, they issue incorrect tax codes and they make quite a few, millions through this. So, in the UK, when someone is salaried employee and when they don't have any other source of income, they don't have to do a self-assessment unless their income is 100,000 or more. You don't have to do a self-assessment, which means you just rely on the employer who issues a payslip. And the HMRC would just send out a tax code to all your employers, and it's just between the employer. Of course, you also get a copy at your home address. Now, most of the time, these tax codes are incorrect because HMRC makes assumptions that this would be your estimated salary for this tax year. So I'm calculating tax on this basis. So that is the stand of HMRC. Like I said, every individual should know what their salary is and how it is calculated, because you don't want to pay more tax. So please make use of those websites which would give you, all those salary calculator, and at least you can have a check with your payslip and see if there is any discrepancy. If there is any discrepancy, just look up on Google for HMRC PAYE. You would be able to call them. Of course, there will be a waiting time, but at least you can get it sorted. You don't want to pay an extra 100, 200 pounds on a monthly basis as tax. Okay, so have a goal, and it differs from person to person. Then the third one is create a budget. So budget is just a document that gives you, let's say an estimated income and expenditure for the month. So if there is any deviation, how are you going to bridge the gap? Now, I would say, please do involve your children in this process, because when you give them that importance, they really feel proud about it, and you are actually inculcating the habit of saving money, and they will definitely be really good with money. It's kind of imbibing the money management skill from parents. The UK Children and Young People's Wellbeing Survey was conducted in 2022. So about 5,000 respondents, predominantly youngsters and children, took part in that survey, and 47% were confident about managing their money and the importance of regular saving. So that's the reason why I say that please do involve your children, in your monthly budgeting. Number 4 is save and invest. Like I mentioned before, there are savings accounts with interest rates even up to 5% in the UK, and you have got like up to £50,000, it would be 5% or 6%. And there are some fantastic retail banks who offer even up to 7 or 8%, just way too higher than Bank of England rate. So make use of those, but just make sure that you invest in the right one. You don't want to invest in a financial institution that is just going to close their business and completely flee away in a week's time. And review regularly. So whatever you do, you have to keep track of your income and expenditure. Okay, so this is what I wanted to save this month. Have I saved it? If not, where exactly did it go wrong? So that kind of review, because it shouldn't be like a New Year resolution, just gone within a couple of days. Okay, so can we have the next slide, please? That's going to be about organizations. So these four are steps of any management theory you would see, right? Plan. Now, plan again, it is more of setting a goal. So what exactly the company wants to do? Is it going to produce something? Is it going to render a service? What are all the geographical locations we are going to target? And what sort of marketing, what sort of people we are going to recruit? Communication is the key to success, right? So you need to have proper system like hierarchy so that you achieve success. And we always say that the goal has to be SMART. SMART as in S stands for specific, M for measurable, A for achievable, R for realistic, and T for time bound. So an organization has to tick all these because you don't want to, have a goal that is completely unrealistic. I mean, would someone come up with an idea of, let's say selling sunscreen, in Iceland? It's not possible, right? So it's completely nonsense. You don't want to do that. So don't just come up with some sort of fancy ideas or, unrealistic, which you cannot achieve. Now, the next one is budget. So I have already mentioned. So budget is a detailed document. It's a breakdown of, now we are talking about organizations. So it will be the breakdown of anticipated revenue, like income and expenditure. And budgets will be prepared for every department, right? From human resources, finance, production, logistics, distribution, and so on. Budget provides the roadmap for success. And there are various types of budgeting. Even if you are not a pro in budgeting, doesn't matter. There is something called zero-based budgeting, where you just start from the scratch. You don't know anything. So I'm just going to get into my business, put my head down and start something. And within a month, you have already, sold something, you have paid your suppliers, so you have incurred some expenditure, then take that as the basis. So based on the last 2 months or 3 months, then you prepare a budget. Okay, that's called zero-based budgeting. And there are various types of budgets, what organizations use. Again, review. So this can be monthly. So basically it would be like a departmental meeting, or it's always the burden on the finance. I mean, I had worked as a management accountant. So this is the most time consuming task, as well as you're at the mercy of stakeholders and your bosses. So reporting just gives you what exactly the company has achieved so far. And we have to talk in numbers. For accountants, it's so easy to, if you give me a set of numbers, I can just go on and on and on for, 3 hours. But to talk like this, to address something is, a Herculean task for me. So you need to have a proper review so that you know where exactly you have deviated. If everything is within your estimated, budget, it's well and good. But if not, then you have to take adequate steps to control further so that there is no more deviation and you're trying to, get back on track. So that's the last one, control. So basically you're trying to take some corrective action to avoid such discrepancies or variances. So it could be like cutting expenditure or probably increasing more marketing activities, or you want to diversify in a different market, in a different product line. All those things will be under control. So that's about, the financial, because it's such a generic term, I'm trying to give you a brief idea of, how it is going to help individuals as well as organizations. Can we have the last slide, please? So this is the summary. I mean, of course, this is more suitable for individuals. So be disciplined about your financial goals. Please do not give up. It's always hard. So try to have a preset goal and please do work towards that. And learn to distinguish between wants and needs, because having a car with 4 wheels probably is just need of the hour, but you don't want to, splash your money having a Mercedes or BMW and then incur a huge, debt. So you need to, let's just not get into the vicious circle of desire and raising debt after debt. Make a habit of checking your credit score. So this is very, very important, because you would be surprised to note that even if you had not updated your address, let's say with the Electoral Commission, or if you had not registered, for voters ID, then your credit score will just take a nosedive. So please don't do that. Try to make sure that all your records are up to date with governmental organizations, and take the necessary steps to pay off your debts, right? Because it is going to restrict your potential if you're going to have more debts, which means, I mean, I can't sleep well, if I have more debts. Of course, our life is such that we cannot, because we have not inherited anything from our parents, and we don't belong to like royal family also. So we just need to work hard, earn our fortune, and then make sure. But then you need to have the right set of attitude. And basically, not just individuals, not just organizations, you need to be completely abreast of the information with regards to what's happening, in the market. So that's very, very important. So please do not be aware of what's happening in terms of investments or savings or HMRC making a new announcement or a tax cut or whatever. So how is it going to help me? So that should be the thought. And always try to meet means with ends. So that's about it. Have you got any questions for me?
Oh my God, Sujatha, you have blown us away. I can't believe this. I thought when it's a financial foundation, it's going to be just nitty gritty of that, how to set up the business. But you have given amazing insight of not only just as a business, but as an individual. I have learned a lot. I hope you all are taking the notes. My notes are here. I have learned, Sujatha, so much, that there are 5 pillars of foundation: investment, emergency fund, debt management, protection, and healthcare. I am definitely going to follow for my businesses now this advice. And when you are managing the individual finance management, don't forget, you have to make sure that you are putting the correct tax code. And people, you are listening, that how important it is, being an organization or the personal growth finances, plan, budget, review, control. These are the 4 pillars of your premises or the business or your personal life. Remember, plan, budget, review, control. Be disciplined. Learn to distinction between the wants and needs. Oh my. And how can I say this is my want and this is my needs? The only thing is you can find out that is it fulfilling your need, requirement, or is it giving you the additional luxury for your life? Make sure the habit of checking the credit score. This is very tiny, teeny thing, but remember the way Sujatha has explained us, it is very important, because without the credit score, you will not able to get more funds from the market whenever you need it. And the very last, but don't forget, do your savings and expenses according to your budget. So Sujatha, thank you so much. We have over 160 live viewers who are watching today this session. Very much thank you to coming and joining our show. Let's first now listen from our second speaker, who is a very well known in the industry when it comes to acquisition and the investment. So we heard today that how the finance market is lubricated from Sujatha, and how do we manage day-to-day business and the personal finance. Now today, our second speaker is a Julie Wilkinson. Welcome, Julie.
Hi, thanks for having me.
Hi, Julie. So let me just tell brief about Julie. I was blown away when I was reading her bio. Julie is a founder of a Wilkinson Accounting Solution. She's specializing in the successes, exit, acquisition, and investment relationship. Hey guys, you are hearing it? Then listen Julie Wilkinson advice very, very carefully, because she has experienced nearly 5 years in go-to advisor for ambitious UK company. If you are medium or large scale, don't forget to knock or call Julie for that. She leads the team focused on the enhancing financial processes for the businesses with a turnover ranging 0.5 million to approximate 50 million. Hey, you guys, come on, aim high and contact Julie about this. So Julie, today the show is yours now. You have a 15 minutes. Please do let us know your journey about yourself. And of course, our audience would like to know, how do we make money while we are doing the acquisition and the investment in the businesses?
Yeah, thanks. I'll share my slides in a minute. So my background is I'm a chartered management accountant by trade. I worked in corporate for over 20 years, and I've now had founder of Wilkinson Accounting Solutions for the last 4 years. We do sort of traditional bookkeeping, tax and payroll, but our specialist area of consultancy is we help with mergers and acquisitions and exit planning. So we ultimately help people buy and sell businesses. Myself, I have acquired businesses in accounting, which has grown my business. I'm a property investor, professional speaker, and I also host a podcast channel called The Build and Exit as well, where we're a year old now, and we have guests that come on that talk about buying and selling businesses. So I do have a few slides. Oh, it's not letting me share. Well, I'll start, and then when I can share, I will. And yes, I'm going to talk a bit about today a sort of that transition, I suppose. I mean, I transitioned from corporate to acquisition entrepreneur, and I sort of, one of my things I help people with is to look at that journey of how you can sort of maybe transition from corporate to entrepreneur or acquisition entrepreneur, and a bit about why people buy businesses, and then the sort of a standard process you'll go through if you want to do it. So right, let me share now. Okay, can everyone see? Can you see the screen? Yeah, okay, so just these are the things we help with in our business. We have virtual finance and CFO, we're acquisition CFOs, tax and bookkeeping, and business and exit consulting. So when we talk about acquisitions, I think a lot of people, especially women in business as well, I think get a bit afraid because they think acquisitions is multi-million big corporate deals, but actually what it really means when you talk about acquisitions is you're buying something. So if you're starting up a business, the question you've got to ask yourself is, do you want to reinvent the wheel and start something from scratch? Or just, is there somebody out there that already has what you need that you want to buy? That's basically what you're asking yourself, because acquisitions don't have to be multi-million complex deals. They can actually be quite small asset sales where you can buy other customers or you can acquire assets. Because that is why people do acquisitions, to get into new markets, to get access to technology, to get access to people, and to get access to obviously customers and grow their wealth or their business, basically. So I've done an asset sale myself. We've worked on tens or hundreds of acquisitions within the business. We've seen lots, everything from sort of small couple of 100,000 all the way up to sort of multi-million deals. And the process you typically go for is you first of all have to decide why you want to do an acquisition. I think it's really important to look at like why you want to do it and what your skill sets are, and what acquisition will suit you. I do think a lot of people, there's a lot of courses out there that are just teaching people to go and buy no money down deals for large businesses, but ultimately they do struggle after with cash flow. So I think understanding like why you want to do it, and having if you've got your own business now, because you can either buy a business as an individual, you could buy it as a business, and if it's your first ever business and you're acquiring into, or you could be bolting it onto like an existing business, because you need to understand why you're doing that acquisition, how it's going to help you grow. And I always think the best way to do that is a bit going off the back of what Sujatha said with her planning, is a plan, really, because what you've got to look at is, I would always suggest someone go at least 3 to 5 years out, probably on their own personal finances and their business finances, because what you want to know is, I vision that I want to earn X, so you want to earn X. So if you want to earn X money, what you've got to work out in a plan is, if I grow organically in my current life, my business, whether that's a job and you're going to move to acquisitions, or whether that's a business, can you get to that point X? If you can't get to that point X, that is typically where people will bolt on an acquisition, because it can help you basically double or potentially even triple over relatively quickly in a short period of time. And I would say most businesses, probably when they get to about 500,000, can struggle with growth without an acquisition, because it can be very hard to grow organically, needing the cash investment and the overheads to meet that growth. And an acquisition can really help, especially when you get to that stage. So once you know what you're going to do, you'd look for a deal. And this is what this little table is here. This is kind of like the flow chart, how you would do a deal. So you would find, you'd look at the type, you'd look at the industry. You then go and look at, okay, what do I want to buy? So am I going to do a share? Typically, there's two types. There's a share sale, which is a full purchase of a business, or there's an asset sale, which is acquiring elements of a business. And you'll decide what fits you best. And then once you find a deal, you would then get to sort of the legal documents, heads of terms, which is there where you sort of talk out the deal structure, what you're going to pay, and you'd go through due diligence to ultimately sort of close the deal. So you have like a cycle that you go to. And I suppose if people are feeling a bit fearful about whether an acquisition is right for them, I just think you just need to take a bit of time to plan and see whether, what can it actually mean for you? Because once you start going to market and looking for deals, you can be really surprised what you can find. Some people do everything from sort of purchasing little cafes, if you want to change, maybe you want to change of lifestyle, you want to go and live by the sea or something, all the way through to big deals. So then what you then have to start thinking about is how you'll fund your deal. So, I wouldn't be recommending anyone go into acquisitions without their own cash flow or budget plan, because you've got to understand what do you need to actually do the acquisition in the first place. So you need to have your own sort of budget and financial plan in place, whether that be a person or whether that be a business. And then what you can look at is you can go, right, what excess cash have I got to do an acquisition? Reality is probably deal fees on an acquisition is probably going to cost you somewhere between 25 to 40,000. That's when you're looking at stamp duty, legals, accounting, professional fees and things like that, probably the average deal fee. So you're going to have that money for those deals. And you can get funding, and you can find funding to actually fund 100% of deals, if you're quite savvy and you're working with the right advisors. But you do need to be able to sleep at night and know that you can run this business after. So I wouldn't always advise too much debt. You've got to look at what's realistic for your own business model. And then you want to look at, does it need to have certain characteristics on the deal you're looking for? So does it need to have a certain level of cash to even buy it so you can sustain that business? And have you got cash to invest in the business? If you haven't, do you need it? When's the right time to do the acquisition? And then what industry would you buy in? So, I've had people on my podcast that have done everything from sort of accounting firms all the way through to, like Airbnbs and restaurants and things like that, depending on what your lifestyle and why you want to do an acquisition. And then how many deals do you need to do? Because if you have your plan to get to X, what you've got to work out is, if I carry on organically, where will I get to, and what is my gap? What gap do I have? And I suppose theoretically that gap is what you've got to fill. And most people will be able to bring forward their overall plan by an acquisition, because it'll obviously spearhead the growth of what you want to do. So looking at how many deals can be quite useful. And then what is your exit strategy after acquisitions? Like, why are you doing it? At the end of the day, we all are running businesses and doing things for our own personal gain. So I do think like your own personal journey and what you want in life is quite important to think about, like thinking about your own vision of why you're actually doing it. Because most businesses being sold in the UK are quite owner operated. So that would mean that they're running, the owner does a lot of work in it. And typically then if you buy it, you could get quite heavily invested in running that business. So if the seller hasn't set it up to run, then ultimately the buyer will have to buy it and then transition it to run without them, for them to then exit and get the highest multiple from it. So then we look at valuations. So typically businesses are valued on EBITDA, which is earnings before interest, tax, depreciation and amortization. So it's just a fancy word for profit before tax, basically. And there are some industries that are valued slightly differently, but typically an average industry might be like 3.5 times an average of 3 years profit, but some industries might go for more. And then you'll have your balance sheet. So you'll look at like your net asset position. So what's the balance sheet like? So how much money do they have in the bank? What do they owe out to people, to see like what the net position is? Are they solvent or are they insolvent? And then you'll start to be looking at what's the deal structure. So the deal structure basically means how are you going to buy it? So what are you going to pay for it, and when are you going to pay that? They're the two main things that obviously the buyer seller wants to know. So they want to know, well, how much are they going to get for it, and when are they going to get their money, basically? And what you need to be able to do as the buyer is build your plans, and work out a sensible plan that is affordable for that business to do. Now, that might mean some businesses just aren't for you. Potentially they're too high risk, they might not have enough money, and you might not be able to get the funding. So you've got to be sensible with your decisions as well. Then you'll be looking at your funding structure. There's nothing wrong with getting funding to do acquisition. It's normal. Most people will get funding to do acquisition, but there are different types of funding: cash flow funding, asset funding, or seller financing. And seller financing is the most popular because it's typically interest free, because it's basically where the seller themselves gives you the debt. So you basically pay a percentage up front and get the rest of it on installments, interest free, effectively. So basically you've made your plan, you've decided different acquisitions for you, and you've gone to market and you found your deal. You would do your heads of terms. So your heads of terms is your initial deal document that basically outlines the deal. Once that's signed, generally you have exclusivity. So it means that as the buyer, you get now legal rights to that business for X period of time, whatever you've agreed in your heads. So then you move into detailed due diligence. So you would need, we'd recommend you have all your advisors. So from our perspective, we would do operational, tax and financial. And then you would have your legals, which would be your solicitors. And other types of people you might need would be people like HR, especially if you're going to 2P or you've got employees. Potentially IT. I mean, it depends on the business, but if you've got a tech business, for instance, then an IT due diligence would probably be sensible. So you might have, you might do a health and safety due diligence if it's, some sort of trade or maybe high risk sort of business that you're buying. So, you'd have different types of due diligences, but sort of legals and financials and HR are the key ones. And then the rest you might bolt on depending on what type of deal you do. So I think the most important thing is some people do try to do on the cheap. Some people are going into these deals with no money because they're being taught on how to do no money down deals, so effectively buy businesses with no money. But the problem with that is there is big risk because people always need contingency. So if you don't have any money to ever build up, and some of these people you can't always trust because they say, oh, I buy a business with no money, but what they're not telling you is they've got another business somewhere with hundreds of thousands of spare money in that they could just give to that business if they need to. So you don't always listen to what everybody else is doing. What you've got to look at is where are you and what can you afford to do. But I do feel acquisitions could be for anybody that feels they can do it, because if you're an entrepreneur by heart, typically you can do an acquisition because once you buy that business, what you now are is just a business owner. And all you've done is, rather than start it from the ground up, is you've bought it. So it is a quick way to grow. So then you'd look at, we call it post-acquisition, because you've now bought this business, so you now own this. So ultimately now you're just the business owner. You're the legal owner of this business. And therefore, whether it's your business or you bought the business, you'd want to get good processes and controls in place because you would want to start running that business effectively so you know how it's making money and what cash flow it's got. So the sorts of things we'd be looking at would be good bookkeeping, your KPIs and your operations. So looking at KPIs or your key performance indicators, which are what do I need to achieve to make this business to run, financial reporting, cash flow and working capital. So you'd want at least a minimum of a 12-week cash flow and maybe a longer term cash flow to see plans. And looking at your own budgets and forecasts of what are you now going to do with this business to make it sustainable after you buy it, because ultimately every business has some form of debt when they buy it because they're now buying back a business that wasn't paying that before. So you have to be able to manage those debts after you've closed the deal. So I think key takeaways are, before you go into that, because I don't know who watches this show, but, first of all, even if you're working a corporate job, I came from corporate, I transitioned to my own business and I've successfully done acquisition. So I do believe it's possible for everybody. And I think don't get too overwhelmed. Mergers and acquisitions sounds quite technical, but ultimately simplicity, you're just buying a business that someone else has built. And I think some of these things are quite advanced. So if you've already bought a business, it works quite well. But if you're in the early stages, I think the most important thing is to look at why you need to do it. Could it be right for you? And how would you manage that process all the way through, sort of from going to market to find the deals to then sort of managing it after you purchased it. And that's the end.
Wow, Julie, thank you so much. That was an amazing presentation. I mean, I was blown away as well that how the acquisition can be the simple but then complicated. Just to let you know, guys, that we are having a 393 viewers online who are watching your presentation, who are gaining the insight of the financial foundation, whether you are small business, medium or large. Today, we have provided everything. Thank you so much, Julie. So I have taken lots of notes. I'm going to repeat it so that if you forgotten to take the notes, please note down now. Acquisition that means to buying the business, which is an ongoing concern business, which is going on already. People are there because, for example, I have 2-3 businesses, and if I want to sell off, there are many people who want to buy off. Instead of starting everything from the scratch. Why? If you have money, why can't you buy the ongoing concern? And it comes with the advantage. Why not? Because the business has a past record of making profits, having the balance sheet, and then which will help you to borrow more funds from the bank as well, because it's ongoing business. Now, what do you do if you've decided to take over anyone's business, whether it's a cafeteria or the multi-million business acquisition? The simple steps are you need to find out, as Julie has mentioned, why do you want to do it? What is your personal skill set, which is going to help you to grow this business? Because don't forget, she did mention it, whether small or large business, every business comes with a little bit of debt, and you need to learn how to manage it once you acquire that business. Of course, it has a valuation stage, it has lots of other legal and due diligence. If you're not sure, don't worry. There are lots of legal advisors available, like a Julie Wilkinson. Why don't you contact them, and they will go through with you step by step. It's a peace of mind that you are not getting in the wrong deal. They will make sure that the business which you're buying, it has the funding solution. It has 3 years of the profitability margin. They can see the balance sheet, and they can talk to the bank and do the valuation on your behalf, so that you can understand whether you want a cash flow funding or financing funding, and it's more of it. Unfortunately, we don't have more than time, but we are here to learn more about it after this show, or even at the end. We will share the details on the online, and we will share it on the YouTube as well. Please feel free to contact Sujatha Renganathan or the Julie Wilkinson, depending on your needs. They both have amazing experts in their own sectors. Now we have crossed 400 plus viewers on the Facebook. So there are many people watching it, and a couple of questions have been dropped. So first question, if you both are ready, Sujatha and Julie, I would like to drop one question to you. Let's see who can answer it. So the first question we have is, could you elaborate on the key principles entrepreneurs should consider when laying down their financial foundation? Who would like to answer it? Sujatha?
Yeah, no problem.
Lovely.
Like I said, the goal has to be smart, specific, measurable, achievable, realistic, and time bound. Make your balance sheet stronger. Julie had mentioned that in one of her slides, it's the net asset. And be 100% aware of what's happening in your external environment, which is the market you're dealing in, the changes in legal or financial framework, and so on. And it's, constant education for the entrepreneur also, because you can't be completely, washing away your hands. Okay, I have set up my business and that's it. So it will just, going to hit the roof. It won't. So you need to make a constant effort to completely educate yourself as to what's happening, what's affecting your business. And the primary idea is to focus on the balance sheet, have a very strong balance sheet, which is we call as positive net worth.
That's lovely. Thank you so much. I hope you all got the answer. We have a lot off, as you know, being an entrepreneur, yes, there is a flexibility, there is a room for growth, and sky is the limit, but it comes with a responsibility. As Sujatha said, the key principle could be that you have to be on your toe all the time, not just for the learning, but of course, you have to understand the external environment and internal goals as well, and understand your financial stability is very, very, very important. You remember the finance is a blood for any business, and we need to make sure that we don't dry out, because once the finances is gone, business is dead. So that's it. These are the key principles. Thank you so much, Sujatha. Now we have another question, which is, in your experience, what are some common pitfalls or the mistakes that entrepreneurs make in managing their finances, and how can they be avoided? Let's talk about the mistakes. Julie?
Yeah, so I mean, I've done a lot
Thank you.
No, thank you. I've done a lot of surveys on business owners, and I think, I mean, one of the reasons I started my business because I asked 20 businesses what their accountants did for them right at the beginning. 100% only saw their accounts once a year. Because I do a lot of consultancy, I see a lot of balance sheets and and my key thing that I see is a lot of people aren't financially literate. So obviously they have an accountant, so I'm not saying they need to be War and Peace, but I do think business owners have a responsibility to have some form of financial knowledge. And the key bit I see is the problem is the balance sheet. So I think often what happens is they get their accounts from their accountant, they get a profit number, they get a tax number. They probably roughly understand that because that's what they've got to pay. But the problem is they get their balance sheet and they don't really understand their balance sheet. They say they do, but I mean, I know because when we delve deep into when we see variances, and we see a lot of variances, I would say 95% of balance sheets we see don't reconcile. And I think the problem is people are fearful. They don't know how to challenge or to ask questions to their accountant, so they just don't, or they bury their head in the sand a little bit and don't know. So one of the things I'm trying to do is give more teaching to get people to become more financially literate, because I think it's really important. And I do think that's probably one of the biggest issues is the owners themselves, because advisors aren't with you 24 hours a day. So if you need to make a quick decision, I do think you need to have some form of financial knowledge to be able to make those decisions.
Thank you, Julie. That is a fantastic answer and amazing. Yes, as Julie rightly said, that common mistakes are the financial illiterate. Yes, we all know that how to add 2 plus 2, but do we know how to make money out of 2 plus 2? And that is very, very important. Yes, when I was young, I remember my grandfather used to say, money fetch the money. So you need a fund, you need a money, but you need to understand how to manage that finances. Yes, and for that you have to, as the Sujatha previously said, that you have to keep on updating yourself. Julie has reiterated that answer as well. You need to completely update again and again and again about the financial situations and learning about what questions you need to. But you need to understand a little bit, because end of the day, I don't know about you guys, but I remember when I submit my VAT return or the final account, my accountant cleverly put the line under it that they are submitting on behalf of me and I am advising them to submit it. So that means the whole responsibility as a business, all the submissions goes on my shoulder. So for that, we must take some responsibility. Thank you so much, Julie. Now, before I say anything, we have one more guest here, Tina Burke. Tina, where have you been? We missed you.
Oh, now I don't know what you mean. I thought this was at 9 a.m. PST. I must be mistaken on the time.
That's okay. Finally, you are here, and I'm very much, Tina, just to let you know, we have a Sujatha Renganathan and we have a Julie Wilkinson who has already done their presentation and answered a couple of questions as well. Hello, audience who is listening us live, which is 350 plus audience live are watching our session today, and many more, they're going to watch it again and again, the repeated one. So we have here in house is a Tina Burke. Let me give an introduction about the Tina. Tina is the owner of the Burke Recruitment. She has with over a decade of the accounting experience before specializing in recruitment accountants. There you go. Now we have in-house somebody who recruits the accountants. She is a founder of the Burke Recruitment INC in 2000. That means she's coming and live from the USA. She's known for the exceptional customer service and top-tier candidate delivery. Tina is recognized as one of the PIV's 40 under 40 and shares insight on the feng shui in business through podcasts and blogs. She's also co-author of a book with a married diamond. Oh my God, I know this lady. Showcasing expertise in recruiting and the business success. Welcome, Tina. We don't have much time, but I can easily give you 5 to 10 minutes to please share your insights on the financial foundation about how to grow the business. Thank you.
Oh, sure. Thank you. Thank you. So yes, and I feel like this topic is very crucial for the success and growth of any business. I was thinking about it when you asked the question before about just as a pilot would need to understand the controls of his aircraft, a business owner must comprehend the language of money. So, I mean, the first thing I did when I started my business is I started with the basics, which were really just a budget and a forecast. And so from there, I was thinking about, okay, so what do I need to do to create this budget? So I set clear financial goals and, you develop a budget that aligns with your objectives. So you want to prioritize spending on activities that drive your growth. I feel like you really have to watch any unnecessary expenses, especially in the beginning. And then, you want to keep a close eye on cash flow and maintain that healthy balance between revenue generation and expenses. So the second thing I did was I looked at cost management, which is very vital for a business. You need to identify areas where savings can be made without sacrificing your quality or your efficiency. And so just really analyze every area that you're using your expenses. And I know this is like, it's a meticulous approach, but it can really impact your bottom line. And my third area that I looked at was cash flow management. And so, which is crucially important. I mean, you have to stay on top of your accounts receivables. So one thing, you want to make sure you're collecting, you're making sure that people are making the payments by your due dates. Sometimes you may even offer like cash discounts if you pay a little earlier. Same goes for accounts payable. Make sure that you're maybe taking some discounts. Sometimes they offer discounts for early payments. And then keep negotiating with your suppliers. Regularly look up and review your agreements. Don't get complacent with your one supplier. So you want to always be on the lookout for better deals and alternatives. And then the fourth thing I looked at was investment strategies. So just another key aspect is like, if you have some cash, maybe look at investing in new technologies that could help. Or in my case, for example, I was paying large rents and for my office space, but I looked at purchasing the office that I was in. So it could work or it may not. So you really want to hire some great professionals to advise you. So look at the pros and the cons, the rent versus having that, you at least have some power where you can stay in that building or that office and not keep getting kicked out after leases are expired and changing addresses and things like that. So conduct thorough research, do your due diligence before making any investments decisions to mitigate risks. Okay, so that's my fourth. My fifth, which cannot be overlooked, is tax planning. And so make sure you get an excellent accountant to advise you on strategic tax planning, take advantage of available deductions and credits, stay updated on tax regulations, leverage tax efficient strategies minimize your tax liability while maximizing your after-tax income. So in conclusion, because I know we don't have much time here, I'll just say that mastering your business finances for growth requires a multifaceted approach encompassing budgeting, cost management, cash flow management, investment strategies, and tax planning. So that,
Wow, that's
yeah, I'd say
that
if you,
was a quick and a very to the point. Thank you so much,
you're
Tina.
welcome.
As previously Sujatha and Julie has mentioned a similar thing, but you have touched much in details about how to manage the cash flow. Make sure the account receivable are there. If people are not paying money or they're taking longer to make the money, why don't you give them the cash discount? Because remember, making profit is very important for finances, but more than that is the running the cash flow. Because more and more turnover with the cash flow, you can play with the cash, with the assets, which is called current assets. She has very said the 5 big things. I'm going to just repeat it quickly. If you want to note down, the budget, which includes the cost management. She has mentioned about the cash flow management. Tina mentioned about the supplier. Don't forget, don't stick to one supplier, because over the period of time, you never know. There is a new supplier emerged in the market, and they are more quality, more cheaper, and more cost effective. And then investment strategy, as already Julie has mentioned, the investment strategies, what kind of investment you should do. It could be the acquisition, but be smart on your investment, whether you want to do fixed investment, technology, what is the ROI on the investment, which is a return on investment. And the very important, as Sujatha also said, Tina mentioned it again, is the tax planning. Make sure you are talking to your government body that how much tax you're paying. And if they don't answer you, you know where to go. We have 3 experts on the room. Please contact them. They are there to support you and help you. And I am so pleased to have a Tina around. Tina, may I ask you one question if you don't mind? We have one question from the audience.
Yes.
It would be a privilege that if you can answer it. So question is, how do you suggest balancing the need for the short-term finance stability against the long-term strategical investment for the business growth? How do we balance it?
Well, I would say you want to prioritize your essential expenses for sure. So identify and prioritize essential expenses, which are critical for short-term financial stability. So such as operational costs and debt obligations, allocate resources efficiently to ensure that these expenses are covered while maintaining liquidity. I'd say a second thing would be to maintain cash reserves. So build and maintain adequate cash reserves to withdraw or for unexpected challenges and downturns in the short term. So having a financial buffer can provide stability and flexibility to pursue long-term strategic investments without jeopardizing your day-to-day operations. And I would say a third thing would be to set clear goals and priorities. So define clear long-term strategic goals and priorities for your business growth. Evaluate your investment opportunities. So assess your potential long-term strategic investments based on what your business goals are. Implement so what I would do is break down long-term strategic initiatives into manageable phases or milestones. So implement your projects into different phases to allow spreading out your costs and to minimize short-term financial strain. And of course, monitor and adjust the whole way through. So you're continuously monitoring to make sure that you're within your goals. And then always seeking out financing options. So I would say that's probably maybe that in a nutshell.
That's very much in a nutshell, but it's to the point. Thank you so much, because I know it's not easy to answer this question by short-term financial stability over the long-term strategic investment. So, hey guys, you have listened what Tina Burke has mentioned, that identify and prioritize your goal. It's very, very important. Building and maintaining cash reserve, setting clear goals, long-term strategic investment opportunity, and as always, every three of our speakers has spoken very, very loudly, monetizing. Make sure that you are overlooking your own business, because end of the day, it is you who is responsible for this finances. So make sure you monitor your goals, you monitor the process, you monitor the finances. And for that, if you need any further support, we have 3 experts in the house, and I cannot shout anymore. Please do reach out to them. The 3 of experts, Sujatha, Julie, and Tina, has amazing experience, years of experience, and they are here to serve you and help you with that. So now we are 2 minutes over the time. I know everyone wants to go, but thank you so much. And it was amazing to have 3 of you. Thank you, Julie. Thank you, Sujatha. And thank you, Tina. So don't forget, hello audience, don't forget that we have a next session, which is the next Thursday, 11th April, 4 p.m. GMT time. And there is a second episode. What we are learning on that? We are learning the market domination, how to learn and the winning strategy for the market success. Today, we have learned all about the finances. The next week, we are going to learn about how to prepare the strategy, or how to win those strategies which will help us to the market success. So thank you very much. See you next week, Thursday, same time. Thank you.
Thanks for watching. Don't forget to catch our next session live on 11th April 2024.